comes to Africa. And because of our vision, we are supporting all kinds of sources in terms of our farmers, putting up manufacturing facilities in Africa. And there's a simple reason. The simplest reason is because it is cost effective and quality can be controlled. And moreover, our own competitive edge is the unique process and the management procedures that gives us the competitive edge in terms of pricing and quality. Moving further, our vision is very clear, very simple. We are a bunch of professionals, which include Dr. Denny Beach coming in with XYZ experience that we can highlight, Dr. Sam, and all the rest of the team. So we could give up a little bit about the leadership. But the idea is to continuously improve. And since we started this firm more of an NGO, but since we have moved it from an NGO to corporation today, obviously we have to zero out on all the profits and everything because it was an NGO. So what you as an investor should consider is that we are pretty much a startup, but a startup more of having a track record of securing orders and improving our sales and improving our packaging, selling out containers, and moreover securing orders from different countries. Uh, Most importantly, we were able to get ourselves listed on Amazon.com, which was a great success. So yes, we our vision is to add value at every step of the value chain through an innovative approach. So let's say if we're talking about cashews or if we're talking about coffee, it's just not regular coffee, but there's obviously different kind of innovation. There's innovative procedures, packaging, so on and so forth, on which we are working. Uh, our values are very clear and simple. We as much as we have CSR and other initiatives which are part of our campaign, but let's be straightforward. We talk about accountability. We believe everybody working in the firm is accountable, and same goes for all of the members, all of the stakeholders. We speak because we're in the trading business, so obviously fairness becomes the key factor. We are responsible people, socially responsible and otherwise responsible as well. Most importantly, we talk about integrity, care, and ambition. So if you read accountability, fairness, responsibility, integrity, care, and ambition, it is Africa as it is if you pick up the first letters.
Okay.
Uh, uh, so moving further, right now, where we are and the kind of orders that we have secured by far are cashews, cacao, and coffee. This is our focus as we speak. Uh, we have the sources in our hand. We have finalized the place where we need to put up our manufacturing facility, and most importantly, we have worked backwards, which is that we have secured the orders before we are jumping into trading. Now, in trading, if we are simply traders going ahead with our own brand, we can't really have those kinds of margins which would be attractive to you. As much as the money that we might have to, invest in just stock keeping, it is better to invest the same amount or similar amount of money in the manufacturing process. So then obviously I think we have seen in the group the brands that we are working on. However, I will show you what's going on because Amna is currently working on your packaging. So there we go. So we're trying to work out on inversions and inverted what do we call inverted designs as well. Amna, can you scroll up a little bit? Yeah, blended spelling. All right, so we are working on this line. I think what we're going to essentially do is that we are going to rework on the background colors to differentiate each product. Our idea was that uh, our idea is that we are going to have a color differentiation, but a Go Africa product from a distance should look Go Africa, especially even in the retail market and other markets. So we have consistent packaging. Each packaging should be differentiated from variation of color and variation of the illustration that we have put in. So once we talk about the brands, they are well-researched brands. What we have picked up, so let's say if we're even talking about coffee, you starting from the most famous of the coffees, which is Starbucks. they have a white branding, a white and green branding. The retail brands like Nescafe and Davidoff, they all have a brown and gold or a black and gold branding. Now we wanted to insert gold, but I thought it would be expensive because initially we're not probably talking about the volumes that that Nescafe or Davidoff, for example, are enjoying. But once we do have volumes, we can afford having a gold foiling and all the rest of it. Right now, we could still try to go ahead with a more sustainable, recycled paper packaging, which would be good, and it could be aluminum foil from inside just to keep up with the freshness. So once we're talking about the brand, then we have brand lines under each, which we are yet to work out. So we can talk about cashews. So you have chocolate glazed cashews, you have salted cashews, you have other cashews. So the brand lines would pretty much be presented over here. In within the value chain, what we're essentially doing is that currently we are over here. We have our warehousing. We are doing wholesale, and we are doing kind of. We have a trading platform. So these two, three things are out there. But what we really essentially need to do is to start out from production. We have our own warehousing when it comes to the agility working space, which we're going to showcase to you in a bit. From over here, we have two sources from which are actually the revenue streams and the distribution network. One is through importers, brokers, and traders, and one is our own direct trading platform, which is under development as we speak. Uh, Most importantly, we are hitting the wholesale and retail. Wholesale, retail both reach out to the consumer or the end user, and we, as our trading platform, is directly reaching out to the consumer or the end user. Now, the question is, what about the pricing? Are we working on a fixed pricing? Because obviously, if we are selling a product directly from our trading platform, we have to fix a price, right? And our importers or traders or brokers in other markets, or even wholesalers and retailers in other markets, they might have an inflated pricing. So this is the idea. What we essentially need to do is we need to sign up wholesalers or key brokers, key traders in certain countries and have them, you know, go ahead with the ask price that they're looking at. So they have enough margins to sell. But countries where we do not sign up with importers, that's where we should have a direct consumer. We could have a base price plus logistics, which we should offer to other people in different consumer markets. So basically, what's happening is that their price is protected. So let's say if you're dealing in Italy, there is a wholesaler over there, and you tell him, okay, you're selling at $20 a pack. You can continue selling at $20 a pack. We're selling at $12 a pack in US, or let's say another country where you're not present, so it is $12 a pack over there. So even if people go online, if they order, we'll try to work out on the pricing by playing with the logistic price, so our wholesaler or importer is not hurt. You know what I mean? Got it? Okay.
Yeah.
So we do have a success story, and it's a very clear cut timeline. I think so. It's pretty much how we have launched our brand and what we have developed over the time. Out of everything, this is more of the background as to what we were doing. But 2016, we're on Amazon.com. 2017, 18, and Core 4 2018, we are actually talking about a better product, a better packaging, launching cashews, and then we're probably entering the peanuts market. And most importantly, we're going ahead with secure long-term contracts for cocoa powder and so on and so forth. And this is where we are right now. In 2019, we have a different vision altogether. Our ambition is as follows. 2019 core one, we need to have a production facility in Ghana. Why we're starting in Ghana is because we have a deal with Agility, which is one of the largest firms in Kuwait, uh, and we can manage our production. Most importantly, our warehousing, end-to-end logistic solutions. This is where we require a bit of our investment that should go in. Production facility in Cote d'Ivoire, that's towards the end of the year. Target is very simple. Our target is to raise $10 million for this, another $17 million for this one. This is a total investment of $27 million. This number might change because we might be cash rich during the first year once we are done raising this. Our preference is that the people who have invested the seed capital with us in our production facility in Ghana, they will be issued preference shares for investing in Cote d'Ivoire. And moreover, if they wish to exit, their exit would be the first step before we expand into Cote d'Ivoire. Then where is the investments made? The investments are made into land, production equipment, inventory fulfillment, and working capital. With both of these investments coming in, this is what we're achieving. We're achieving two working facilities for sustained product supply and pretty much become the largest supplier from Africa in the product category that we are talking about. Now, today, in these days, the name of the game is to pretty much go into a market, buy the best, become the biggest, and become the only source. And this is the only way we can do it. Africa, West Africa is famous for coffee, especially Ghana is famous for coffee. Then, as well as cashews, we have Ivory Coast. Uh, if we are able to fetch the best of the best and the most of the inventory or most of the stock, so we pretty much become stockist and we can charge the price that we wish. uh, Targeted profitability, which we are going to further discuss. Our gross margins are pretty amazing, 42 to 46%, which is pretty much what the industry standard is. The gross margins are calculated on an industry average sale price. Um, we Our production target ultimately after the first 2 quarters is to go ahead with one container a month, but obviously it is going to scale up during the first 6 to 7 months, because obviously when you start a production facility, you come across all sorts of things. You need to, your team needs to be fixed, many things needs to be there. You might face problems in multiple issues can arise. So therefore, the first 4 to 6 months, obviously, we'll be producing less, but our full production will be at a one container a day for each product. So if we're talking about 3 to 4 products, we're having 4 containers, 3 containers a day, which is a huge operation. Regularly, the small medium enterprises, let's say in Dubai, we're still doing some great business. On an average, they have products like these. They have 7 containers to 15 containers a month, which they import for a market like UAE. But markets like Saudi and heavily populated countries and better traders, they have 3, 4 containers coming in for each product a day. We think we can win that kind of market share, not in the Middle East, but also in other European countries and few other countries that we are talking about and we are targeting. Why Ghana? Okay, it's a simple read through. I won't explain much over here. Why Cote d'Ivoire? Here is the key. We have a target market which is a B2B. Uh, Currently, we have been targeting USA, Spain, Italy, Tunisia, and UAE. But future is Egypt, KSA, and China. And these 3 countries are the key. Again, they're the most heavily populated country, high demand country. There is competition, but there's not a lot of competition. 1 second, just excuse me. मुझे एक गिलास पानी ला के दो, ठीक है? और ये टेबल साफ करो, जल्दी से टिश्यू पकड़ो, ठीक है? All right, sorry. And then let's talk about the business segment. So we have cooperatives, trader, international brokers, local buyers, wholesalers, retail chains, online store, restaurants, snack producers, and government sector. So our key for B2B to achieve volumes, we're talking about traders and international brokers, as well as wholesalers. Retail chains, online stores is essentially for brand marketing purposes, so we are famous, and people can recognize the brand. Snack producers is again a back end where okay we receive simple, and we'll have a simpler packaging as well, because people who are producing snacks, all they're looking for is a product simply packaged just so that it remains fresh, nothing fancy, and it just goes in. आप लोग ले लो. So same goes with government. With government we have we can do specialist packaging for government. And by the way, we were thinking that we can also design another packaging just to showcase how official packaging for different governments can be done. For example, we'll use their flag, and it could be something with the government has directly ordered from Africa. You know what I mean? But once I show you the packaging, you'll have an idea. Like for example, in UAE, and I've seen it in Saudi, I've seen this in Kuwait, and I've also seen this in Pakistan. There's a government of Pakistan or a government of UAE seal on the packaging. So certain edibles are imported uh, with the seal of the government, and that kind of work can also be done. Moreover, why we're talking about this target market, because the B2C target market we're looking at, our packaging pretty much represents the same. If we are talking about the socioeconomic class A and A plus or B and B plus, we can't really go for a cheaper packaging. Yes, our prices could be cheap. Our prices could be a little bit below market average, but the value should be there because if you pick up the package, it should look rich. People should be proud to bring in a Go Africa packaging to their homes. And moreover, we are trying to use neutral colors because we're talking about countries like USA, Spain, Tunisia. So, as much as we try to pitch you the packaging with all kinds of fancy colors and African patterns and everything, perhaps we thought to come up with something which is more neutral, uh, a little bit mainstream because we are into the export market. Some people may appreciate such kind of motives and stuff, and some people might not. And the kind of personalities we're looking at is balanced, professional, witty, classy. So we're definitely not looking at students or kids who are looking at fancy coffee like Second Cup branding or a typical Costa branding. The integration is as follows. We are into the trading business. We're going to go into the factory and warehousing in Ghana, Ivory Coast. We're looking at online porter wholesale. The only thing that we'll be dependent on, which we're not directly doing right now, is retail. And what we're talking about is the Go Africa retail experience franchise concept in 2020. So, frankly speaking, if we run once we run through the numbers, you will find out that our entire business proposal is highly cash rich. We'll have a lot of cash in hand, which we intend and plan to reinvest not only in stock and not only in growth, but in innovation and in creating a Go Africa experience. The future of the economies of the world are in two segments. Number one is online, and this is why we have an online portal because ultimately every single thing in this world a decade or maybe earlier would go online completely. So we're talking about online. Wholesale and trading is primarily our focus is to run our regular cash flows and to pay the cost of the capital, excuse me, and so on and so forth. Uh, but the future is to give people a retail experience. And for this, what we're targeting is affinity marketing. We are targeting to join hands with established brands to give African experience. And we can further expand on it, but right now we believe it's too early because we're still 3 years down the lane. Uh, there is a reason why we're standing here in front of you, trying to present, trying to share what we wish to do. And the most important thing is that we have to meet the demand for trading volumes. And this thing comes from experience. What has essentially happened is that we did have orders which were difficult to replenish because we were completely dependent on our suppliers. And we are the one who are facing our customers. If there's a mess up in the order in terms of quantity, quality, or anything of that sort, it is us who take the complete risk. Um, and dealing with Africa is not that easy because African countries necessarily do not have the total quality management system to ensure that what we have ordered is what we're going to get. So, in terms of that, to meet the trading volumes, to ensure quality, to achieve economies of scale, to make sure we have the right profit margins and we have ready stock and inventory to sell, we need to integrate. There is no other way. I mean, if somebody comes back to us and tells us that, you know what, why don't you just run their show as an online portal and I'm happy to invest $100,000 so you guys can run an online portal or maybe $500,000. Frankly speaking, a simple online portal would not work. Okay. The reason is because we do have demand, but without manufacturing, without quality control, without our own facility, without our own people, and without our own management system that we have created over the last 3 years, it is impossible to achieve the profit margins that we're looking at, or else we'll be wiped out of the market. We will not have a clear competitive edge unless and until we make the $7 million investment in the countries and in the warehousing and manufacturing facility that we're talking about. Because cost variation is there. So let's say none of the currencies in Africa are actually pegged with dollar. So there's a lot of currency variation. We have experienced it with what has happened with Turkey. We have experienced what's happened with Libya, many other countries. There has been hyperinflation, and we know we're sitting in the middle of a trade war. And you could look at what's happening with the largest exporter of the world, which is China. Uh, Having said that, we do not want to be part of that game. We need to ensure that we are able to give our customers a stable price and we are able to give our customers a stability in quality and a stable supply over the years. And this is our winning edge. Uh, Competitive edge is very simple. We are professional. You could see from our presentation, you could see how clear we are, what we wish to do, what do we need to do, and we exactly know what we're talking about because we've been in this business. We have pre-existing key relationships. It's not only how developing countries work. Frankly speaking, this is how all the developed countries work. And you as an investor uh, knows probably better than us because you're in a position with a large business and you know that relationships is the key. And we have that kind of access to key relationships, government relationships, and as well as relationship when it comes to our buyers and large importers and so on and so forth. We are an already recognized brand in USA, but still we have, let's be honest, we have not penetrated the USA market as it should be penetrated. We were working as an NGO. We did some basic packaging. We did some basic marketing. We ran the show, but the demand was so big that we actually, you know, asked ourselves to halt. We had to prepare ourselves, need to integrate, come back and hit the market much more stronger with a much better product, much better packaging, much better marketing, and a stable supply. But there is brand recognition in Africa, and we know that the brand sells for sure. Uh, we have direct access to consumer, we have long-term secured pre-orders and market insight. Now, unless we're able to sign an NDA or and so on and so forth, we're happy to showcase what kind of customers we have, what are the pre-signed orders that are already in place, and obviously we can guarantee you that the orders are there and you guys can go with us, even meet the customer if you wish, and we can show you 2 million, 20 million orders that are already in the pipeline. Um, the organizational structure is very simple. It is flat. It is not very. It does not have a huge hierarchy. So this is the current. We're looking at a founder and chairman, which is Dr. Denny Beach. Uh, we have an advisory board, which has both financial institutions, other institutions, corporations, and individuals. Some of the people sitting in the advisory board are Stallion Gates and Brand Beat. Brand Beat advises us on marketing, Stallion Gates on our finances. And we have a couple of other gentlemen, great people, businessmen who are sitting on the advisory board who are directly giving an advisory to the founder and chairman, have nothing to do with the operations. We have a CEO, a COO. We have a director for finance, a sales director with two sales managers, an accountant. We have a human resources manager and a warehouse manager, which falls under the chief operating officer. However, after the investment is done, um, it is going to change. So what is going to happen is that we are going to have the founder and chairman with an honorary chairman. Why we need an honorary chairman is because if we are going to different export market, we might have non-executive honorary chairman in each country, which would help us gain trust. They would help us with local expos. They would help us endorse our company and our brand. And they will help us get the right PR that we're looking for market penetration. Moreover, this is not a permanent seat. It's a non-executive seat, and this doesn't really hurt us. It's just a position. However, the key gentleman over here would be the founder and chairman, which is Dr. Denny, along with the board members. So once you make your investment in our business, we're talking about that you could buy, okay, if you're putting in at least $1 million straight up, or let's say $5 million, we can discuss on that with you guys. You get a board seat, otherwise you don't get a board seat. There is an advisory board. Since the founder and chairman is also a board member, so the advisory board would not only be advising just the board, but also the founder and chairman, which is direct and indirect. Board members do not have any direct access to the vice chairman or CEO. The founder and chairman is a person who is active and controlling both of them. Excuse me. So three things falls under two. Vice chairman and CEO are three people looking at are two people looking at sales and marketing, finance, and production. The CEO has an additional responsibility, which is for human resources. In our business, human resources becomes the key because of multiple factors. One of the factors is that this is not just regular human resource management, which we do in developed countries. We are talking about Africa, and I remember Dr. Sam clearly mentioning once that we have to do all kinds of medical fitness certificates, XYZ for human resources. There are multiple factors which needs to be considered while hiring in African countries, and this is what we are talking about once we talk about human resources. So it's quite a difficult part that needs to be taken care of. Frankly speaking, this is a simpler part. So in our feasibility study, these are the kind of salaries that we have already, taken care of. Okay, gentlemen, I'm sorry, but most of the team is there, so you could look at us directly instead of looking at our pictures. But we do need your photographs here, and we're going to put your photographs over here. Advisory board, we're yet to work on this. Now we'll come up to the investment structure. So one sec. Let's go down to financial forecast. Now, if we look at the gross profit margins, we are sitting somewhere around 40%, going all the way up to 50 some percent, which is GP, and this coincides exactly with what we presented over here. This slide. Yep.
42 to 46.
Yeah, 42 to 46. So we are pretty much on the same line. The net profits as of revenues, again, pretty much the same. The average inventory, this is what we are looking at, the overall inventory. As much as we wanted to showcase that it's a just-in-time inventory management, I think it would be hard to achieve, especially at the beginning. But we are having higher inventory towards the end because we're scaling up our production. And please do remember that we have another facility coming over here in the 3 to 4 years. Sorry, after 1 year in Cote d'Ivoire. And there's a little bit more expansion, due to which we're talking about that the average inventory would increase. On the contrary, the inventory turnover ratio looks very attractive because it is the exact opposite of what the curves are. so so while our turnover is increasing, to fit in this turnover, we are holding on to the inventory over here to supply this. Then we're talking about the asset turnover to generate revenues. Again, our asset turnover ratio is very attractive. The most important thing which you should be looking at as an investor is as follows. And your investor's return on investment is approximately a 3.5 to 5 years payback period, which is extremely attractive. We are paying out a little less, 15 to 20% in the first 2 years. Uh, we are paying a little higher, about 40% in the third year. So you'll be out with your return while we grow during the first 3 to 3.5 to 5 years, which is extremely attractive. The interesting part that if we look at the depreciation, our depreciation is calculated to all the details. We have the entire machinery, office equipment, everything. But if you see, our fixed assets are not that huge as compared to what they could be for a setup like this. Reason being that we could become an asset based company, but we need to remember that we are a trading company, and in trading company, our fixed assets are relatively less to avoid depreciation and to make sure that the evaluation of the company increases over time. The only way to do it is that we have a better current asset ratio, and the fixed assets should be minimalized. The benefit for having stronger current assets is because they're easily liquid and so on and so forth. If something that we are again looking at is cash, as I mentioned before, the numbers that we are looking at over here, uh, we are an extremely cash rich firm. And having said that, trading requires cash. Sometimes you come across pricing, you come across stocks uh, which are low price, and somebody wants to resell, or there is stuck suppliers who are unable to resell. They give you the same stock 20%, 30%, 40% cheaper than the market, and the person who has the cash is able to buy it and make profit. So while we're talking about cash, this is the key that we are focused at. Now, once we say that we are a cash rich firm, God forbid something goes wrong between us and our board or our investors and somebody wants to exit, and even some of our board members require cash immediately, we are a cash rich firm. We can actually pay them off and buy back the shares in literally year three. Here's the cash budget. We can always look into it. These are all details. Uh, the P&L statement is over here. So if you look at the profit and loss, these are the net revenues, which are on a growth stage. 37% over here, 38%, 45, 48, 51. Uh, the reason why the net profit is increasing is because of a number of reasons. One is efficiency, and one is the type of deals that we have finalized back home in Africa, which gives us which gives us a regular, which gives us a fixed cost at, because we've secured the cost for long term. So our cost pretty much remains the same. Moreover, the net profit does increase because of lower cost, higher revenues, economies of scales, and efficiency. Going down, our gross profit is increasing pretty much at the same ratio. Net profits are increasing at the same ratio. So frankly speaking, if we look at the dividends, here is the payback period. Year one, year two, year three, and year four. Payback period is 3 years and 3 months. Worst come worst, you're looking at 4 to 5 years. But 3 years and 3 months, if that's what we calculate, I think this is extremely interesting because you're averaging around 33% per annum. Uh, these days, if you're investing in any other company, you're not looking at a 33% payback period. Generally, what you receive is anywhere between 12% to 15% max. If you're investing in a fixed asset, you're looking at 7% to 9% max yearly return. And remember that this is only the returns, but you do have what we call as the share price valuation and the company valuation, which is going to increase once it's a success story. And as we said, that this is just a round one. If we have the round two of our investment, that's obviously the share price is going to increase and you guys can exit. So we have multiple exit ratios. Now, if we come down to our structure, following is the structure that we'll be looking at. Enough of the screen, guys. You guys need to look at my lovely face.
Okay.
Yeah. All right. Let me know once you guys get bored. Yeah.
No, it's good.
That is
Okay.
good.
Hiram, I'm going to use your whiteboard for a while. Okay.
Oops. Oh, sorry, wrong button.
All right. No, that's all right. So, वैसे रही पकड़ना यार, so I can put this together. ये क्या हुआ है? Okay. ये नीचे वाली screen हमारी है, ठीक है? So currently the investment structure that we are looking at is as follows. So we are looking at the first investment was 10 mils, and this is giving 20% of equity, and this 10 mil equity is coming in as in Go Africa as it is. But Go Africa, this is for the Go Africa African market, which is the facility in Africa. It does not include the facility in, let's say, Ivory Coast, but it only talks about the facility in Ghana. Even if we raise this, so the reason is that we're going to present 20% to 25%, but we are going to take it at a maximum threshold of 33.33% for 10 million. Because essentially, if we're talking about our investment, required investment which is the working capital 11, correct?
Yeah.
So if we open the Excel sheet, we have uh, the total finance which is required is 11 million, out of which the capex, correct? Am I under? Are you
Yeah.
guys following me over
Yeah.
here?
Yeah, we follow.
Okay.
Yes.
So
11.
any investor would turn around saying that basically you guys are just putting in 10% of the equity and 90% is plugged in by us. But what we need to tell them is that this is not really the ratio. You're getting one third of the business for doing literally nothing. Most importantly, this 10 million is not something that we require immediately. It's going to be done in shots. The shots how this 10 million is going to be distributed is as follows. We are looking to raise the first 5 million as one shot. If there's a person who is investing 3 million and above, you get the board seat. Otherwise, you're just an investor with us. So we are essentially, what the investment structure is, that 3 million is from one investor, which we're definitely going to do. We might have two investors at 3 million each to raise 5 million, or let's say 6 million. The balance 4 million, we are working on a fund which we are going to launch, and the 4 million will be raised at the following. It's $100,000 share. So, sorry, this is not 4 million. I can't follow it. This is the 2 million, which will be raised from 100K per share price, and the balance 2 million or 1 million that we're looking at is from a financial institution. Why we're talking about a financial institution essentially is because we are talking with some FIs in UAE, as well as we're talking with some financial institutions in Zurich. However, FIs will only come into picture once we have already raised anywhere in the range of 3 million to 5 million from uh, high net worth individual or a private investor. So the idea is that once this thing is done towards the end of 2019, Q4, when we do the second round of investment for 17 million, we could actually raise this investment and make it to 27 or 30 million. And what we can essentially do is have some of the people over here who have invested over here, let's say the fund or these guys, we could actually get them to exit on the resale of the shares. So people can exit, we do a new round. Now what's happening is that 1 year down the lane, our evaluation today, which is of our firm, is sitting at, let's say, 11 point some million, or let's say 11 million, will definitely rise up to 20 to 25 million. And I'll tell you the reason of evaluation where I'm as bold to say that the evaluation is going to double up. Evaluation is going to double up because of three simple reasons. Number one, number one reason is that you have an online portal which will have direct consumers. And these days, even if you have a great domain name, that domain name multiplies by 100 folds, as you know. So, a working portal, a successful online selling portal for Go Africa, which is a generic name, is not only limited to peanuts, cashews, or coffee beans, but it could be pretty much an unlimited portal where we can have access to products which are related, unrelated FMCG products sourced from Africa, vetted by Go Africa. They're online and we can sell. It's a completely different business unit. And that particular online portal business unit is something which you're very much getting for free by becoming part of our total evaluation. You know, as much as your investment is going directly into the Ghana project. So while we are giving 30% over here, what we're essentially doing is we are giving our investors the following structure: 20% in Ghana facility and 10% in Go Africa LLC or Go Africa Global. So the structure which I'm suggesting over here is that these guys can benefit, the investor can benefit from the Go Africa LLC, under which we have the online portal, under which we have all kinds of products, and 20% from Ghana facility. Reason being because this is where his cash is invested, and he's investing in Ghana in this particular facility. So that's the key. And the proceeds and the revenues and the feasibility study that we have shared is for Ghana. So this is how the ratios are. But obviously, there is no way that we could increase the Go Africa LLC total. However, my suggestion is that if somebody comes down saying that, you know what, I don't want to be partners in only the Ghana facility, I want to be partners in Go Africa LLC, no problem. Instead of us giving away 30%, we'll give you 15% against 15 million in Go Africa LLC if you want to do that deal, right? So what's essentially happening is that we are not really giving away 30% of our equity, but we're only giving away 15% of our equity in Go Africa LLC. Now, Go Africa LLC is a firm which owns. So the structure is something which we're going to explain. What we have is that we have Go Africa LLC or Go Africa Holdings on top, and we have all these facilities, online portals, and everything, and retail underneath it. So if you want to become, the reason is why we want to give away shares in Go Africa LLC is because remember, this is our first round, you know, and in the first round, even if we are giving away something in our main LLC or holdings company, it still doesn't hurt us because we always have more business units and facilities coming in Ivory Coast and other places where we can always raise finance and capital. Most importantly, if we are able to hunt three or four great high net worth individuals with deep pockets. We don't need to go for a fundraising round every year. It's the same guys giving us a credit line or a cash line for the next 4 or 5 years for us to open up more and more facilities. Most importantly, we might not require to raise this 17 million as well. So, frankly speaking, this person who is invested with us right now in the initial stage, they can go ahead and remain with us forever because, as we said, 3.5 years, we are done with your payback. The next 3 years, we can just go and multiply the facility exponentially, and it's not very long term. Most importantly, we are even trying to exit our investors in 3.5 years. But if we pay out cash more than this 15 or 30% payout, okay, and everybody and all the existing board members they sacrifice, we can give you 60% payout, and you're out in 1.5 to 2 years. If you wish to be out, but if you wish to remain, you can be there. So it's a very clear cut deal. But the evaluation, why it's going to grow, why it's going to grow big, because remember, today the Nescafe brand or the Starbucks brand or Costa brand or many other brands who are, or let's say the Kind brand and many other brands in the cashews and FMCG industry, they're worth millions and billions of dollars only because of one single thing, which is excellent brand marketing and global distribution. These are the two key things. The only way any of these firms have been able to achieve great marketing, great distribution is because the base is that they own and plus control their manufacturing, quality and stability of supply. And this is the key. They have certain systems, they have certain KPIs, they have certain SOPs which they apply. And let's be honest, people are scared to be in Africa, and we're in Africa. Now, if you want to talk about any other structure, which is the organizational structure or however the investor is willing to invest, let's be honest, we are flexible. You want to invest in US, pay the taxes, happy. You want to invest directly in Africa, happy to do that. You want to put up a company in UAE, put the money over there and let the UA company hold the shares in the African company, happy to do that. You want to form a fund, a trust in Panama, in Seychelles, in Hong Kong, happy to do that. Okay, so once it comes to this structure, we're flexible depending on how is your flexibility and what provides you comfort, depending on what you're happy with in the wings. That you want to keep your investment under your own wings, whatever you feel is comfortable, we're good to do that. For us, our responsibility and our bottom line is that we ensure you get your 33% ROI every year and you are out 3 years and 3 months. This is our target. How we achieve it is literally our problem, our domain. And for that, we have shared the complete visibility, we've shared the container prices, we have shared our marketing strategy, our go to market strategy, our manufacturing facility strategy. Everything is in there. And let's be honest, day one until today, we have worked with the best of the best. We are working with Agility Logistics, which is a $2.2 billion firm. We are working with Stallion Gates, which is a $750 million firm. We are working with a marketing firm, which is sitting at approximately 10 to 12 million US dollars as an advertising agency, packaging professionals. We ourselves are coming down from United States who have excellent background in medical, in health, and so on and so forth. So so this is what we are, this is what we wish to do, and this is what we are heading for. And that's pretty much the pitch. And if you would like to further go into details, our CFO or our finance firm, everybody is ready to coordinate further, discuss it in more detail, and we can also provide you with the average pricing, the industry analysis if you wish. We can add those industry analysis for you, so on and so forth. But let's be honest, it's not just about the industry. It's not about where the industry is going. It is about something very simple. People will never stop. They will never stop consuming cacao or cashews or peanuts. These products have been there in this world for centuries. The industry is what it is, and our job is not to, we are not saying that we are riding the wave of a very growing industry just like IT or artificial intelligence or all of this, which is a fad. I mean, these industries, they go up and then they fall. We're not part of that industry. We're part of an established industry which has been there for thousands of years and is going to remain for another hundreds and thousands of years. So so our job is to go in, take the lion's share, and remain there for good. This is why we're going into a mainstream trading business with uh, with a cutting edge processing, manufacturing, management system, inventory control, total quality management system, and a bespoke, winning marketing and sales strategy to go global. So, as passionate as we may sound, this is what we are, and it's a simple business for which we are looking and seeking to raise finance. Rest assured, you're part of $1 billion company 5 years from now, and we're standing right in front of you. Thank you so much.
Thank you.
Thanks. That's pretty good.
This is
I think,
awesome.
yeah, it's awesome. I think you whetting the interest. Um, and
इसको turn around करना.
yeah, can be done later. You guys can hear me, right?
Loud and clear.
I missed some. I don't know what it was. What you I missed a part of what you said, Denny.
That a lot of the follow-up, like which is considered trade secrets, can be disclosed after they've invested. He didn't mention some of the other things that would give away the trade secrets, such as the pricing and the relationship in the process.
Oh, okay.
All right. So, Dr. Jones, you have any comments?
So I
So
had one question. When you were saying before about the people, it was back to the 15% investment in Go Africa LLC itself. That
Yeah,
that
so what we're doing is we're trying to offer two investment structures which can be part of our pitch. And the reason I haven't really put it as part of our presentation yet is because I wanted to discuss this with you after presenting it on the board so we can get the artworks developed. The idea is either they can come in and just buy one third of the Ghana facility,
Mm-hmm.
but people will come in looking at our future plans, looking at our online portal, and they're going to say, "What's our share in there?" So, okay, we want to be part as a seed investor. You want to be part at the first level. More than welcome. Why don't you come in and join us in the initial phase? It doesn't really matter, but over there the valuation is bigger, and we're talking about 15%, not 33.3%.
Okay.
Because the risk is diversified. I'm in Ghana, the risk, higher the return. Over here, this lower the risk and lower the return.
Exactly. I'm okay with both streams. That each investor is different. We're just starting out. Of course, those options go away as we progress further down toward Cote d'Ivoire and other areas. So I'm okay with both of those to start.
Sorry, Denny, I didn't understand the question.
No, it was an answer. I was saying I was okay with both of those to start because those options will go away as the story evolves with Cote d'Ivoire and others.
Okay, yeah, yeah. 1 second, Amna, हम एक रेड कलर डाल के देखें ऊपर.
Yeah. So I think you do
हाँ,
have the
ऊपर टॉप है
pictures of
उसको
everyone.
सॉलिड रेड या कुछ करके देखें.
Yeah. You,
या मे बी लेबल को थोड़ा ब्राइट कर दे कुछ पोर्शन को. हाँ, even we can work the label to be a bit. Doesn't matter. Just so the packaging highlights. Abhi distance se I can't read Go Africa very clearly. You know what I mean? So we can have a red label, maybe a red label on top so it stands out immediately. Yeah.
so
Sorry.
you guys should have the pictures from us, from the team members. Also, we have an event on 12/14, that's next Friday, that we would like to formally launch the new platform in the US. We sent you the login to the Go Africa LLC site so that you can move the content over. It's still a
Sure.
work site. So I think if you could tell us what you need to wrap up the pitch book, we can continue the story.
Absolutely. If we are good with the current structure, you could
Yeah,
have the pitch book by tomorrow evening, tomorrow night actually, because I have to get it through my proofreader as
yeah.
well to make sure there are no spelling and all the rest of it.
Hmm.
Uh, our website, I'll run you through it right now.
Okay.
Aves, can you open the website?
You saw I emailed you guys the login to the port to the LLC, the Go Africa LLC site, so you can do whatever you want with it with your content.
Absolutely.
Okay.
So this is the changes that we have done. You guys can actually refresh the link too, if you like. But here it is. We have made it look a little bit more sexy. So someone mentioned that we need to add some more products in this section. Can you let me know the products and we can add them over here? Because by the way,
It was sesame seeds and let's see. I think I see everything. It's really this. I think they were talking about the sesame seeds. To be honest.
that's it. Okay, note
Yeah.
down sesame.
I yeah, I'm kind of leery of adding anything else, even though the temptation is there, because then it just dilutes the message and seems like we're all over the place.
Yeah,
Okay,
I don't necessarily think that the sesame seed right now.
Yeah.
so so what's happening is that we're actually directly we are actually just putting what are the upcoming projects because we want, let's say if somebody goes if they click on this, they're going to go into another section which is of the projects on top
Yeah.
over here,
Mhm.
right? And we're going to say what we are up to, the processing plant we're putting in there, so on and so forth.
Mhm.
So this is not really about countries, but what I've done is this:
Mhm.
7 countries which regularly import from the Go Africa brand. Your brand, this is going to be new packaging. I
Mhm.
have deliberately highlighted Go Africa available on Amazon.com because I think that's a success.
Mhm.
And look at this.
Oh, that's lovely.
Yeah.
Looks good. So we have got all these flags up there. 5 African countries supply Go Africa with the finest cacao, coffee, cashews, and peanuts.
Mhm.
That's
Okay,
very nice.
and we can add some more. And this is pretty much your form. About us, बना रहे थे ना हम? Show us the about us. This one is about us. Okay, go up. All
Shep,
right, so this
can I
is your
suggest,
about us
Shepard?
from an.
Oh,
Is someone saying something?
yes, I wanted to say if I suggest reorganization of the flags, just so that they're in keeping with how we have things planned now. So we start with Ghana, then Cote d'Ivoire, then we can do Nigeria, and then
Sure. If
Kenya.
you can WhatsApp me the reorganization, I'll get it done. No problem. That's a quick
Okay.
one.
Yeah.
Yeah, that would be great. This is very interesting. So the background that we're using is actually from a banknote of Ghana.
Oh, okay.
Okay. So
Mhm.
we illustrated the banknote and we put it up there. So we are saying from manufacturing to trading and retail, we are a USA based firm with global presence. We're going down on track to exponential growth. Leading firm set, so we've just talked about it. There are some images we're going to change. We're going to put our values, which is from the presentation, which will come over here. Um, and very simply, we're going to say where we're exporting, where we are based. So this map looks pretty interesting, by the way. So you have everywhere we can put wherever they are. This is all
Wow.
dummy. Okay.
Yeah, I like the map.
Okay. So this is going to look really sexy because once you go in Africa, we say, okay, this is manufacturing. This is this. The UAE is where sales is. Head office is here, so on and so forth. We can mark a lot of map and we can mention over there. Um, so over here, what we are going to put is there are these six gallery. We are going to put the photographs of you guys, which is about the founder, the team, and a very brief single liner profile along with your email address and contact details over here
Mhm.
for each team member.
Mhm.
So that's pretty much your about us page. Once these are done, we are on track for the brands page. The brands page है बड़ा हमारे पास. So we have done the brands page as a dummy with some other images, and once the branding is ready, it's all gonna work.
Okay. So,
Guys,
so far,
this is a Pakistani mango juice, by the way.
oh, okay. Yeah. You guys saw the shelf stable packaging he showed up, right? See the package? Did he show? You
Yeah.
saw that, right?
Oh, you mean with the mango juice? Yes.
Okay.
Yeah.
So this is how the projects page look like. So we're gonna have an image of a facility, and we're gonna talk about the project description over here. Let's say Ghana facility, Cote d'Ivoire facility, uh, that facility, and you can be in touch directly because right here at the bottom, over here, we're gonna put who you should get in touch with to talk about the facility.
Okay.
Uh, अपना अवैस और brands. ये brands है कि projects है? Okay, sorry. This is the brands page. So
My connection has frozen.
Mine's fine. It's frozen, but I can hear.
Oh,
No, mine is frozen too.
Yeah. You have to give him a minute. This typically happens. It's probably on his end. There he is.
okay, this is your contacts page.
Hmm.
Very plain, very simple. You have Google Maps, you have phone, and then we obviously have the map where everybody can get in touch wherever they wish to get in touch with.
Hmm.
Within the contacts page, we are actually going to make one section. Over here, we're going to divide this section into two. So half of the section, we're going to talk about careers.
Hmm.
People can apply online with their CVs, XYZ. They can attach a CV and fill out a very simple form.
Hmm. Yeah, we have.
Yeah, so
Ron and I will have the job descriptions for you today. We already have them.
awesome. Excellent.
Yeah.
So if there are any jobs we wish to post,
Hmm.
please let me know and I can share my CV as well if there's an opening.
Hmm. Hmm.
Okay.
Right. So the overall, how's your feedback, Denny, Sam, Kamal? What do you guys think? How is the branding coming forward? How's your pitch deck coming forward?
This
What's your feedback over it?
this I believe is a very solid and an exemptional start. So my feedback is pretty limited. I think some people can go into the minutia like they're doing with the bag, but this is what I would like to see. I think that we should call it a lock and just move it forward because the website and stuff need criticism or critiquing can be done dynamically.
So,
I think the website is. I mean, the website actually looks wonderful. Um, there's not a lot. There's not much that needs to change. I don't know if there's any much that needs to be changed. I love the map that shows with the global map with the I guess the highlighted kind of stars. Um, but it all looks great.
thank you. Basically, what we've done is it is not a regular layout. It is a website. I can guarantee that the first time once you guys looked at the website, it would have remained in your mind. There's a brand recall because of the design that we have put together.
Mhm.
Um, it is not a regular website which just flows down, but the layout has been done very carefully, and you will be amazed once we share with you the online portal.
Mhm.
Because already that is also ready and it's pretty much done. So essentially, once we finalize the packaging today, which
Mhm.
is almost there. I can actually show it to you guys what she has done by far. If there
Mhm.
are any changes, we can do them right now.
Okay.
Yeah.
Yeah. So why don't you guys say hello to Amna? Amna is our lead designer, and she's an amazing woman. Hello.
Oh,
Hi, Amna. Nice to meet you.
Nice to meet you too.
Great to
Okay,
She's
meet
so
you all.
Amna
celebrating,
is
by
the
the way.
one who's working on this. Let me turn this around to. Okay. All right. So we're trying to work on different colors.
Mhm. You know, as I'm here looking at the website, Shafat, and I like that brown tone that is on the website for the coffee.
Okay.
I'm wondering if that brown could